Well, as I'm sure you're well aware, and as I have mentioned myself, equity markets in the United States have been reaching all-time highs. That doesn't mean that the underlying stocks, whether that's in the US or globally, are all reaching all-time highs. In fact, we see a broad spectrum of returns depending on what stock we're looking at. Now, I have some videos covering these topics if you follow these two links here. Today, I want to think about how return differences between different asset classes might tell us something about the future. So, for example, gold might be performing differently than US large cap growth. All right. So as a refresher, we talked about the bifurcation of US returns in that first video, where we found, among other things, that US large cap growth is doing very well, but US small cap value is doing very poorly. In the second video, we went to the globe and we saw again that there are differences across the globe. Countries like China and the United States are doing well. Others like Australia, not so well. So again, different returns in different parts of the world. Today, I want to think about different asset classes, right? So if we look at 2020 so far, year to date through October 31st, so we're a little, we're a month past that, but if we go through October 31st, we can see that gold is the best performing asset class, up nearly 22%, and REITs is the worst performing asset class. It's down 16.4%. But we can also see that gold has been the worst performing asset class in a number of years. We can see in the late 80s, 90s, and then we can see it's also been kind of the second worst asset class in brackets there, 92, 95, 2014, 2015. So it's had lots of times when it's been the worst, despite the fact that this year it is the best. REITs also the same thing. So they have been the best a number of years, 96, 1, you can see the list there. And they've also been kind of second best in 1992, 2011, 2019. So interestingly, REITs worst asset class this year, they were the second best asset class last year. So there's definitely some differences even within that asset class in very close years. So we go back to 2019, we can see here last year, US large cap stocks were the best performing asset class, up 28.5%, but they've also been the worst asset class in 2002, and they were the second worst asset class in 2001. Cash this year is the worst performing asset class at just slightly negative. It has never actually been the best performing asset class, but it has been the second best in 1990, 2004, 2018. So in years when every investment type of asset class is doing poorly, cash is okay, even though it has never quite been the number one performing asset class. In 2018, we can see that kind of international bonds were the best performing asset class. Emerging market stocks were the worst performing asset class. But again, here we find that international bonds have, even though they were the best in 2018, they have been the worst in 2006, and they were second worst in kind of in these other years, 1994, etc. Emerging market stocks, again, worst asset class a couple of years ago, but they've been the best performing asset class in a number of years and the second best performing asset class in a couple of other years. So again, we see these kind of broad swings with certain types of asset classes. We can go all the way back to 1992 if we want to. We see that U.S. small cap stocks were the best performing asset class. And again, we see that there were times when they were the worst, and et cetera. And we also see international developed stocks, they were the worst performing asset class in 1992. But we can also see that kind of in 1994, they were the best. In 1993, they were the second best. So we see kind of this flip-flop back and forth. Now, there are some charts out there. This is really hard to see, but basically kind of a graphical representation of this gives you all the asset classes year over year kind of and ranks them. So you can see, the goldish color there is gold, and you can see how it jumps around. Sometimes it's the worst, sometimes it's the best. It jumps around in a lot of different places. But what you will see in here, you'll see some patterns where an asset class does very well for a number of years, first, second, third best, and then I'll have a string where it's the worst asset class for a number of years. My whole point is I think when we think about returns, think about this year in particular, where large cap growth in the United States has done so well, there's this kind of tendency to think, well, it's just going to keep doing well. But I would be aware of this over extrapolation of past returns. You definitely see cases where asset classes have a string of very positive returns, only to be followed by a string of very poor returns relative to other asset classes. So keep that in mind. Do some other types of analysis in order for you to determine which asset classes are going to be the best asset classes to go into moving forward. Thanks so much for listening.